Everyone already knows what billionaires buy: gold, Bitcoin, real estate, and stocks. That's what financial media talks about every day. When gold hits $4,000, the news says hedge funds are jumping in. When Bitcoin goes near $100,000, experts insist the wealthy are diversifying. When real estate rises, we're told billionaires are grabbing properties. But that's just the public story, the easy story. Behind the scenes, something very different is happening. While the media focuses on these obvious assets, the ultra-rich quietly moved on years ago. Retail investors are still chasing the same things billionaires bought long ago, while the wealthy are now accumulating 3 new assets most people have never heard of. Assets so unusual that even many financial advisors can't explain them, and so powerful that they could become more valuable than gold when the system finally breaks. And billionaires are buying them quietly, with no interviews, no headlines, just hidden purchases through private companies and legal structures meant to conceal ownership. Today, I'm going to reveal exactly what these 3 assets are, why billionaires are rushing into them in 2025, and how normal people can still get exposure without needing billions. Because this isn't about copying the rich, it's about understanding where real value goes when currencies lose power, when supply chains break, and when the financial system that carried us for 80 years finally cracks. And it all starts with the first asset, the one that sounds boring, but is secretly one of the most powerful assets on Earth: farmland. Not random farmland, very specific land in very specific regions. And the man buying more of it than anyone else is someone you already know: Bill Gates. As of 2025, Gates owns about 275,000 acres of farmland, bigger than Los Angeles, nearly the size of Hong Kong. For over a decade, he has been quietly collecting farmland with 3 rare traits: extremely rich soil, guaranteed long-term water access, and climates that support long-growing seasons or multiple crop cycles. His largest holding, 69,071 acres in Louisiana's Mississippi Delta, has the richest soil in North America, unlimited water, and the ability to produce 2 crops a year. In Arkansas, he owns nearly 48,000 acres in the country's top rice-producing area with strong, reliable water. In Nebraska, he bought land directly above the massive Ogallala Aquifer, ensuring water access for decades. Washington State, Florida, and many other regions he buys in all share the same pattern. And he's still buying, just recently paying 4 times the national average price for 8,800 more acres in Washington, because that land came with mineral rights, water rights, and premium irrigation systems already in place. And this last detail, water rights, is exactly what leads us to the second hidden asset. Billionaires are quietly snapping up. The second hidden asset billionaires are quietly buying is something even more important than farmland itself: water rights. Not water bottles, not water companies. The actual legal right to extract, use, and control water. Most people don't know this, but in the Western United States, owning land doesn't automatically mean you own the water underneath or flowing through it. Water rights are separate, and they operate on a system called first in time, first in right, meaning whoever claimed those rights first, often farmers from the 1800s, still has priority today. In times of drought, those senior rights holders get water first, and junior rights holders often get nothing. Now here's where it gets interesting. Water rights can be bought and sold like property, separate from the land. And in regions where water is becoming scarce, owning senior water rights is like owning a gold mine. Billionaires understood this decades ago. The most famous example is T. Boone Pickens, the Texas billionaire who quietly bought land above the Ogallala Aquifer, not for the dirt or for farming, but for the water underneath. Over time, he acquired the rights to pump 65 billion gallons of water every year, enough to supply a city of 1 million people. In 2011, he sold just a portion of those rights to Texas cities for more than $100 million. Not the land, just the right to use the water. Today, his remaining water rights are valued at over $500 million. And he isn't alone. Investment firms like Water Asset Management have been buying farmland in Colorado, not for crops, but for the senior water rights tied to the land. They improve the farms so they use less water, then sell the extra water rights to desperate cities and developers, making huge profits completely legally. In California, billionaire owners of the wonderful company, the pistachio and pomegranate empire, took it even further. They gained control over the Kern Water Bank, one of the largest water storage facilities in the country, built using taxpayer money. During drought years, they sell water from this massive reserve at enormous markups, earning billions simply by controlling access to water that everyone else needs to survive. Even religious institutions are getting involved. In 2021, the Mormon Church spent over $200 million to outbid Bill Gates for Washington farmland because the property came with senior rights to the Columbia River system, basically guaranteed water forever. And Wall Street firms are trying to consolidate water rights across entire states. One company even attempted to acquire private water rights throughout the Columbia River watershed, a move that would have been the largest private water grab in American history. Public backlash stopped some of the plan, but the company still buys water rights quietly in smaller deals, piece by piece. The message is clear. Water is becoming the most valuable resource of the 21st century, more important than oil, and scarcity is rising every year. Snowpacks are shrinking, rivers are drying, aquifers are dropping, and demand keeps growing. In 2030, the people who control water rights will be richer and more powerful than anyone who owns oil today. And that's exactly why billionaires are loading up on water rights right now. Because when water becomes scarce, whoever controls it controls everything. The third hidden asset billionaires are aggressively buying in 2025 is something most people have never even heard of: catastrophe bonds, often called cat bonds. These are financial instruments created by insurance companies to transfer the risk of natural disasters like hurricanes, earthquakes, wildfires, or floods to investors. Here's how they work in simple terms. An insurance company might issue a $500 million cat bond to protect itself from a huge disaster. Investors buy the bond, and their money sits safely in an account invested in treasury bills. In return, they earn extremely high interest, often 9% to 14%, far more than regular bonds. If no major disaster happens, investors get their money back plus those big returns. But if a disaster hits and causes damage above a certain threshold, the bond triggers, the insurance company takes the money to pay claims, and investors lose their principal. Sounds risky, right? Yet billionaires, hedge funds, pension funds, and sovereign wealth funds are pouring billions into these bonds every year because the returns are incredible and, more importantly, not connected to the stock market at all. A recession doesn't cause a hurricane. Inflation doesn't cause an earthquake. Trade wars don't create wildfires. That's the magic. Cat bonds are completely uncorrelated with economic cycles. When stocks fall, real estate drops, and even gold dips, cat bonds often keep rising. In 2024, cat bonds returned 17.4%, beating the stock market by more than double. In 2023, they returned 19.8%, During the market crash of 2025, caused by global tariff tensions, the S&P 500 fell 15%, but cat bonds actually went up 1%. That's why billionaires love them. They protect wealth when everything else collapses. But it gets even more interesting. The industry is exploding. In 2025, the total cat bond market passed $50 billion, up 50% from just 5 years ago. And insurance companies are issuing these bonds faster than ever because climate change is creating more frequent and more severe disasters. Historically, most cat bonds covered hurricanes in the US. But now the market is expanding into global risks. Earthquakes in Japan, wildfires in Australia, floods in Europe, and even pandemic-related mortality risks. Large insurance companies like State Farm and Allstate are now issuing cat bonds directly, bypassing traditional reinsurers, turning cat bonds into a core part of the global insurance system. Billionaires and large funds see the pattern clearly. As climate risks increase, cat bonds become even more essential, more valuable, and more widely used. And because most investors are scared of them, or simply don't understand them, the yields stay high and the market stays inefficient, allowing sophisticated investors to earn huge returns. Even when some cat bonds fail, like the famous 2011 tornado bond that triggered during the deadliest tornado season in U.S. history, diversified investors still come out far ahead because the steady high yields from dozens of other bonds more than make up for the rare losses. It's a long-term probability game, and billionaires are winning it because they know exactly how to balance risk across multiple disasters and regions. In short, cat bonds are the ultimate diversification tool, an asset class that doesn't care about interest rates, recessions, politics, or currency collapse. And that's exactly why the ultra-wealthy are piling into them right now. Now that you know the three hidden assets, farmland, water rights, and catastrophe bonds, the real question is, why these three? What connects them? The answer is simple but incredibly important. These assets are scarce, essential, inflation-proof, and disaster-resistant. The exact qualities billionaires look for when they want to protect wealth for the next 50 years, not just the next 5. Think about it. You can't create more prime farmland with rich soil and guaranteed water. That land was formed over thousands of years. You can't make more senior water rights. They were handed out in the 1800s. And once they're gone forever. And you can't manufacture new natural disaster risks. Hurricanes, earthquakes, and wildfires follow patterns that insurance companies have measured for decades. These assets are connected because they all solve real human needs that never disappear. People might stop buying new gadgets or luxury items during a crisis, but they will always need food, water, and protection from disasters. That makes these assets essential. They also rise in value when money loses its value. When inflation surges, food prices go up, farmland becomes more valuable, and water rights become priceless because scarcity makes demand explode. And catastrophe bonds actually increase yields when interest rates rise. Meanwhile, these assets don't collapse during crises like stocks, bonds, and real estate do. Farmland survived the Great Depression, 2008, and every recession in between. Water rights become more valuable as droughts get worse. And catastrophe bonds are literally designed to stay strong when the economy collapses because their risk comes from physical disasters, not financial ones. Billionaires know this. They aren't buying these assets for quick profits. They're buying them as civilization-level hedges, long-term protection for their wealth in a world where currencies are unstable. Governments are drowning in debt, climate change is accelerating, and global systems are becoming more fragile every year. They're positioning ahead of the crisis curve, loading up on the assets that will matter when everything else fails. Bill Gates didn't accidentally buy 275,000 acres of elite farmland. T. Boone Pickens didn't stumble into water rights worth $500 million. Pension funds didn't put billions into catastrophe bonds for fun. All of them saw the pattern early. And the truth is, the pattern is still forming, but only for those paying attention. So the big question is, how can normal people get exposure to the same assets billionaires are quietly buying, without needing millions of dollars or private deals? You obviously can't purchase 70,000 acres in Louisiana, or negotiate for senior water rights on the Colorado River, and you probably can't invest $10 million into a private catastrophe bond fund, but you can access these asset classes in smaller, practical ways. For farmland, the easiest route is Farmland REITs, like Farmland Partners, FPI, and Gladstone Land, LAND. These companies own hundreds of farms across the country, pay dividends, and let you invest with as little as $10 or $20 per share. It's not the same as owning land directly, but it gives you exposure to rising farmland prices and crop income. Another option is fractional farmland platforms such as AcreTrader or Farm Together, which allow regular people to buy small shares of individual farms and earn a share of the profits. More direct, more transparent, but still accessible. Water rights are more complicated because there's no public marketplace, but you can still benefit indirectly through water utility companies, water infrastructure companies, and water-focused ETFs that profit as water scarcity grows. These aren't perfect substitutes for owning deep aquifer rights, but they align with the same trend: water becoming the most valuable resource of the century. And for catastrophe bonds, you don't need to be a billionaire either. There are now mutual funds and ETFs like the Pioneer Cat Bond Fund, CBYX, and the Stone Ridge Reinsurance Risk Fund, SHRIX, that let everyday investors buy into cat bonds with low minimums and instant diversification across dozens of risks and regions. Yes, there are fees, but you're getting expert management and access to an asset class that was once only available to the ultra-wealthy. Now, let's be clear. This isn't financial advice. I'm not telling you to buy anything. I'm showing you what billionaires are accumulating behind closed doors and why they're doing it now. Because the truth is simple. The wealthy aren't preparing for next year. They're preparing for the next era. They're moving money away from flashy assets and into real, scarce, essential resources that hold value when currencies fall, when systems break, and when uncertainty becomes the new normal. Bill Gates didn't accidentally become America's largest farmland owner. T. Boone Pickens didn't accidentally collect water rights worth $500 million. Pension funds aren't allocating billions into catastrophe bonds because they're bored. These moves follow a clear pattern the wealthy have followed for centuries. When the old financial system starts cracking, they shift into the assets that survive every collapse: food, water, and risk protection. And right now, in 2025, we are living in that transition moment. The question is no longer, what are billionaires buying? The real question is, do you understand the pattern in time to position yourself before everyone else wakes up?